For the first time since 1800, gold has outperformed stocks over a 25-year period. And this isn't just any performance. We're talking about an 800% increase that beat even the S&P 500. A groundbreaking Deutsche Bank study analyzed centuries of market data to uncover this historic shift. While stocks have dominated every 25-year period for over 2 centuries, something fundamentally changed in our financial system. In the next few minutes, I'll show you exactly why this happened and what it means for your money in 2024. Deutsche Bank's top analyst, Jim Reid, just released a fascinating study that goes back further than most of us can imagine, all the way to 1800. He's basically a financial market historian who digs through centuries of data to spot patterns that matter for investors today. He compared different investment options like stocks, bonds, and gold across rolling 25-year periods. What makes this study so valuable is its massive scope. We're talking about analyzing 224 years of market data. When you look at that much history, patterns emerge that you just can't see in regular market analysis. And what Reid discovered about gold's performance completely changes our understanding of safe haven investments. Let me show you something that's absolutely mind-blowing about our central banks. The Federal Reserve's balance sheet has exploded to levels we've never seen before in its entire history. Right now, it sits at around 30% of our GDP. To put this in perspective, before 2008, it was typically around 5%. That's a 6-fold increase. But it's not just the Fed. The Bank of England's balance sheet shows the same crazy pattern. In fact, they've hit the highest levels in their 330-year history. Think about that. Higher than during both world wars, higher than during the Great Depression. Why should you care? Because when central banks print this much money, it typically leads to 2 things: inflation and currency devaluation. This is exactly why gold has been performing so well. Smart money is looking for a safe haven from this unprecedented money printing. This has created a perfect storm that's been driving gold prices higher and higher, outperforming even the S&P 500 for the first time in over 2 centuries. Here's something that should wake you up about our government's debt situation. Back in the year 2000, experts actually predicted we'd have 0 federal debt by now. Yeah, you heard that right. 0. Instead, we're sitting at over 100% of GDP, meaning we owe more than our entire country produces in a year. But here's where it gets really interesting for your money. This isn't just a US problem. It's global. Worldwide debt has skyrocketed to more than 320% of global GDP. That means for every dollar the world produces, we owe more than $3. It's like having a $300,000 mortgage on a $100,000 house. It just doesn't add up. This massive debt has 2 major impacts on your investments. First, governments typically try to inflate their way out of debt, which makes your dollars worth less over time. Second, they keep interest rates artificially low to manage these huge debt payments. This environment is exactly why gold has been shining so bright. It's one of the few assets that governments can't print more of, and that's becoming increasingly valuable as debt continues to pile up. Now, let me show you something that's absolutely historic. Since the year 2000, gold has delivered an incredible 800% return. But here's the kicker. For the first time in 224 years, gold has actually outperformed the S&P 500 over a 25-year period. This has never happened before, not even during the Great Depression or the massive inflation of the 1970s. Deutsche Bank's research team dug deep into the numbers, going all the way back to 1800. They looked at every single 25-year period, and what they found is remarkable. Even during the gold rush days, even during world wars, even during the elimination of the gold standard in the 1970s, stocks always came out on top in these long-term periods. Always. Until now. What makes this even more fascinating is that this happened during what many consider a golden age for stocks. Think about it. We've had the tech boom, the recovery from the 2008 financial crisis, and even the recent AI revolution, with companies like Apple, Microsoft, and Nvidia hitting record highs. Yet gold still managed to outperform. This shift tells us something crucial about our financial system. Despite all the headlines about stock market records and tech company valuations, gold has quietly been the better investment. And remember, this isn't just about a few good years for gold. We're talking about a fundamental change in how these assets perform over decades, something we haven't seen since Thomas Jefferson was alive. So, what does this historic shift mean for your money right now? The massive debt levels and expanded central bank balance sheets aren't going away anytime soon. This creates a perfect storm for gold to remain strong. While I'm not suggesting you dump all your stocks, having a solid gold position, around 10 to 15% of your portfolio, makes more sense than ever. The key is understanding that we're not just seeing a temporary trend, but a fundamental change in how global finance works. Speaking of global changes, if you're concerned about protecting your wealth, you need to see what China is planning for 2025. In my previous video, I break down how China's massive gold purchases and the BRICS nation's new payment system could impact your investments. Click the video on your screen now to understand why central banks worldwide are stockpiling gold at record rates.